When we talk about cost, it's all about perception. There's so many ways you can view cost. And what classification you use depends on the kind of decision you're about to make. The chapter has so many different types of costs: variable costs, fixed costs, direct costs, indirect costs, controllable costs, and controllable costs. Now, if I were in your shoes, I would be totally confused. Like, my goodness, how many more classifications can we have? So just to bring some more clarity to this chapter, I'm making this video, so hopefully I can shed some light on how to view costs, how to classify it, and when is it best to use what classification. What kind of questions do the classifications help you answer? If I had a question, what does it cost me to make my product? What would I want to know? I would want to know my product cost. If I had a question, what does it cost me to run my business? Well, what would answer that question? Period cost. In a business, there are a variety of questions that need to be answered. So, depending on the primary questions you have in your business, and no two businesses have to exactly answer the same set of questions with the same amount of importance. So, which is why, first of all, before you even start classifying costs in your books, in Accounting 211, we talked about how to classify, where cost appears in a financial statement. Before you even make those categories or even make those accounts, the first thing you really need to do is decide what is important to me as a business. What do I need to know? Because without the right classification, you cannot get the right answers. For example, if product cost is important, if knowing your product cost is important to you, but you never track it, you will never know what your product cost is. So, which is why we have classification by function. I want to know two things. The two important questions I want to know. If I'm a manufacturing business, I want to know, what does it cost me to make my product? And after my product is made, what does it cost me to run my business, which means what it costs me to sell it, what does it cost me to provide customer service? Those are the two main things. So once I figure out, okay, what it costs me to make my product, what it costs me to run my business, well, we have subclassifications of that too. So product cost has three subcategories. It has raw materials, work in process, and finished good. Raw materials means I go to my vendor and say, hey, maybe I'm a restaurant, I want 10 bags of rice. That's my raw materials. My working process means I take those 10 bags of rice, I bring it to the kitchen, and I start prepping my food. That is my working process. Working process means I am just getting all the stuff I need to start production. And then the finished good would be the plate I give to my customer. Now, for working process, there are three things that go into working process. There's direct material, there's direct labor, and there's allocated manufacturing overhead. Now, this is the core of this class. If there's one thing I want you to get from this class, is this classification, because this is what we'll see in this class over and over again, because if you don't get this, you will struggle. And once I'm done with that, I know what my product cost is. The rest of it is my period cost. Okay, so now I have to do marketing, because it's not enough just to make my food. If I was a restaurant, I need to let people know, like, hey, I'm here. And then I need to hire people who will serve the food. I'm not going to tell my customers, go to the kitchen and get your food, because nobody's going to serve you. So those are my period costs. So next we'll talk about another classification, which how we can track cost by how it's traced to the product. Okay, previously we talked about product cost having three parts: raw materials, work in process, and finished goods. Well, work in process, when I start working, well, I'm not just going to have my raw materials and say, like, hey, come on, go cook yourself. What do I need? I need labor to go into it to prep the food, and I need a space. I need space, I need insurance, I need equipment. That's my overhead. When raw materials, it goes into the production process, it's called direct materials. It no longer becomes raw materials, becomes direct materials. So knowing this, and knowing working process has three parts: direct material, direct labor, and allocated manufacturing overhead, I have a new problem. I have a new question I need to answer, which is, how easy is it to trace my costs to my process? For example, direct material. I know it's very easy to trace. I know if I'm making a plate of rice, I buy 10 bags of rice. It's very easy to trace that plate of rice back to 10 bags. Direct labor, if it takes one person an hour to cook the food, it's very easy to trace back to the food. So because of that, direct material and direct labor are called direct costs. But however, allocated manufacturing overhead, how do I trace my rent? How do I trace my insurance? How do I trace my equipment back to that plate of food? That's a little bit more complicated. And we'll spend actually 3 chapters talking about how to allocate manufacturing overhead. Um, because that's how complicated this issue is. So because of it's more complicated to allocate overhead, it's called an indirect cost. So when we talk about classification by traceability, we're talking about two main things, which is direct material, direct labor, and then for direct cost and indirect will be allocated manufacturing overhead. And this is all happens because we want to properly cost our process, our working process, and we need to answer that question of how easy is it to trace, because if it's not very easy to trace, then we have to develop other systems to make sure we capture the information to give the results that we need, because we want our books to be as correct as possible so we can make good decisions. When I have questions about volume, I want to look at cost behavior. And basically, cost behavior is just how does cost change as a result of a change in my activities. So for example, let's say I'm an accounting firm, and let's say I'm going to I'm going to get one more client. Well, one more client is not, I'm not going to have to go hire like a person to serve that client. So my labor cost is not going to rise if I have capacity. That's just making the assumption I have capacity. However, if if having one client means I have to subscribe to a service per client, those costs are going to rise as I hire more clients. So those ones that change according to the activity, for in this case, the activity is hiring my clients, are my variable costs because they vary with the amount of clients I'm bringing in. However, those costs that don't change as I hire more clients until I reach a certain capacity, those are my fixed costs. So remember, when we're talking about classification by behavior, we're talking about how is my cost going to change as my volume changes. The next type of classification we're going to talk about is classification by economic impact. And by like this, I mean basically how will this decision affect me economically? So that's called classification by economic impact. And when we talk about economic impact, it's not only necessary for business. Actually, this also impacts you personally. If you understand how to use this cost in your personal life, it could help you make better decisions as far as should I repair my car or should I buy a new car? Should I buy that house or should I rent a house? Because basically, you look at this cost, there's 6 main types of costs, or not all of them are necessary for all decisions, but basically know what's relevant for each decision. And looking at that, looking at the numbers, and it'll say, okay, you know what? At this point, it's better for me to rent because the long-term impact of this decision is going to be it's going to cost me $30 more. I mean, in finances is the only thing you have to consider. Obviously, that's what it is. But sometimes, besides finances, maybe it will cost you more to rent, but because you have a sick parent or whatever, it might be better for you to buy to stay in that town. So basically, the other factors that go into decision making. But if from a financial perspective, knowing these cost items could actually help you make better decisions if finances is the only thing that you need to consider between two options. So now let's look at them. We have opportunity costs. The opportunity cost is a benefit you forego by choosing an alternative action. For example, if you had only two choices, you can only go to school or work at the same time. You can't do both. If you choose to go to school, you forego the full-time income you could earn by working. That's an opportunity cost. The out-of-pocket cost in this case will be the money that came out of your pocket to pay for your tuition. And it also includes any student loans you get. So once you pay for it, it becomes sunk cost because it's a cost incurred in the past that has no future consequences. For example, I can't if you don't get the job you want, you can't go back to UIs and say like, "Hey, give me back my money because I didn't get the job I thought I was going to have." Well, sorry, you paid it, you still owe the student loan. It's done with. So sunk cost is not going to have future implication. Then there's differential cost, which is the difference between two alternative costs, two alternative actions. So for example, if I had option A, option B, option A cost me 30, option B cost me 20, well, the differential cost is $10. And then marginal cost is the extra cost incurred when one additional unit is produced. For example, if for example there was some emergency situation, somebody comes to me and says, "Hey, can you help me produce 10,000 units of this?" Like, so I want to know marginally what will it cost me to make that extra unit. And the average cost is just my total cost divided by units of activity. So the last classification we're going to talk about is classification by the ability to control. And basically this answers the question of, if I were to have subunits, what does the manager in that subunit have control over? Because if I'm going to give him a bonus based on his net profit, well, it wouldn't be fair if I charge uncontrollable costs to his account. He doesn't have any control of it. So the only thing I want to charge to his account are the costs that he actually has control of. So controllable costs is the cost that the manager will have control of, and uncontrollable costs is basically costs he has no control of, because that comes from corporate. That's not his. He can't do nothing about that cost. It's just cost that has to be incurred.